G'day, Binanceans, and welcome back to this week's episode of Binance Beach. I'm your host, Liam, and today I'm going to be tackling a pretty common critique of Bitcoin, that it is too volatile to ever be money or ever be adopted as money. This is a really common critique from skeptics, and this is something that I actually heard this week when having coffee with a couple of mates. We were talking about Bitcoin, and in particular, we mentioned, or what was mentioned was Bitcoin's volatility. And a line from one of my friends, which kind of stuck with me, and I didn't get the chance to expand on this further, was this idea that, if Satoshi had just made it more stable, it would be better money. It would serve its purpose a little better. And so I wanted to jump on the show this week and kind of address that idea that Bitcoin is too volatile, the volatility is a flaw in its design, and that the volatility of Bitcoin right now is the reason that it could never be money. And I want to break down why I think that perspective is not exactly right. We want to run a bit of a thought experiment that shows why Bitcoin's volatility is so critical, and maybe try and present an argument that the opposite might in fact be true, that Bitcoin's volatility is critical to its role as a challenger money in today's financial system. So let's kick into it. Let's have a look at Bitcoin's volatility. Now, Bitcoin is clearly volatile, right? As we zoom out and we look at Bitcoin from 2023 to date, we've run from 24,901 up to $126,199. And in the last couple of months, we've absolutely run well back down to 85,688. This is an incredibly volatile journey that we're on. And if you like volatility, it can be really fun. But if you don't like volatility, this can be pretty scary. And I think it's a pretty good time to be having this discussion as well, because we have had this market downturn the past couple of months, because we may be looking at another extended bear market. And so what's going to help you as a Bitcoin hodler keep your diamond hands and keep stacking or holding through the bear market? It's understanding the fundamentals of Bitcoin, why Bitcoin is great money. And so I think this is a really good time to be having this discussion. So volatility, what's the opposite of volatility? It's stability. Now, people might initially say that dollars are stable, right? They might compare Bitcoin, and this is a Bitcoin to dollars chart, and they might say Bitcoin is volatile, dollars are stable. But that's not exactly true. In fact, that's not true at all. Because while dollars are our denominator, it's how we price things, that doesn't mean that they're not volatile. In fact, dollars are quite volatile to the downside, right? Looking at this Kabisi letter tweet, we see in every major economy, the UK, the US, the Euro, the Germany, France, Japan, and Australia too would be on this chart, and New Zealand. We see enormous amounts of CPI since January 2021. This tweet from Pomp as well shows trueflation, which is an alternative way of measuring purchasing power over time compared to official inflation statistics, up 25% since January 2020. So the dollar is volatile in purchasing power terms. And this is the most important way to be framing this discussion, is not the fact that $1 is still equal to 100 cents yesterday and tomorrow. It's what can you buy with the dollar? What is the purchasing power that money gives you? And how is that changing over time? That is volatility or stability, not the absolute amount of cents that buys a dollar. So that's a really important place to start. It's a really important place to frame our conversation. Fiat is volatile, and fiat is volatile to the downside. It's not as volatile as Bitcoin, no, but Bitcoin is volatile to the upside. Let's leave that aside for the minute, and let's go with a bit of a thought experiment that helps to extrapolate this idea a little bit further. This idea of stability in purchasing power over time as being really important. So let's imagine that back in 2008, Satoshi Nakamoto sees the GFC unravel global financial markets. He sees the bailouts that are made to financial institutions, and he sees the impact that this is going to have on the way that money and fiat money works around the world. And let's say that Satoshi's aim here was to build a money that was going to protect purchasing power over time, which I don't know if that was his direct goal. I don't think that was the top of his agenda necessarily. But let's imagine for a second that it was, that stability was the North Star, that stability of purchasing power over time was the most important metric for Bitcoin. Or let's say TrueCoin, right? Like let's invent another currency or another idea to put a name to this. Let's call it TrueCoin. Now, let's say that the mechanism for this, and you hear talk about this in crypto every now and then, that there needs to be a stable coin or something that matches trueflation or that matches inflation. There's this idea is not mine and is not new, but this idea that there should be a currency that perfectly tracks purchasing power over time. Now, aside from the fact that I think that would be incredibly difficult to build, which is evidenced by the fact that nobody's been able to actually build this yet. Like nobody's been able to build a stable coin that accurately yields perfectly to inflation. And that's probably because inflation is different in every market. Inflation is very hard to forecast versus, to measure in hindsight, because you can look at trueflation versus inflation. It's impossible to do. I think it's functionally impossible to do, to create a perfectly stable currency by purchasing power over time. But regardless, let's take this thought experiment. Let's say that Satoshi had succeeded. Let's say that Bitcoin or TrueCoin that he made in this hypothetical instead of Bitcoin perfectly matched trueflation over time. And if I had bought one TrueCoin in 2010 or 2008 off Satoshi, that I would still be able to buy the exact same amount of goods or services that I can today, or even an approximation, right? Like, I don't think that's the most important part of this thought experiment. Would that have taken off? Would that have been a project that people were interested in? Would that have been a project that would have attracted so much of a narrative? Would that have been a project that would have got such enormous capital flows? I think you can make a very clear argument for no, right? Like Bitcoin's mimetic narrative, like arguably Bitcoin is the most successful meme in the history of the internet, right? I don't think anything else has attracted $2 trillion worth of market cap or $1 trillion worth of invested capital. No, like meme on the internet has attracted this much attention for such a prolonged period of time. And Bitcoin's volatility is such a key important part of that. And the early stories about people who were rewarded big, who were, who made riches from their early investments in Bitcoin, from their early allocations to Bitcoin, are such a core part of this narrative. If Satoshi had invented a true coin that just perfectly mapped inflation, I think it probably would not have gone anywhere, because who wants to perfectly protect their purchasing power over time when they could increase it? A true coin that was perfectly stable, that perfectly matched trueflation or inflation, would not have outperformed the stock market. It would not have outperformed gold. It would not have outperformed treasuries. And so it would not have been an attractive investment. And so it would not have gained capital. It would not have gained popularity. It would not have gained notoriety, even in Bitcoin's case. It would have gone nowhere. It would have flopped right there and then. So I think Satoshi was very justified in not trying to build Bitcoin with a North Star of protecting purchasing power. And the way that Bitcoin's number go up technology was designed, that the number go up technology was built, was to vastly outperform inflation, was vastly outperform purchasing power over time. It was to capture productivity rather than just to mirror it. So that thought experiment, I think, helps you understand why a crypto or any currency that perfectly maps with inflation or trueflation may not take off, that it would be a very difficult sales pitch to perfectly protect purchasing power over time. And I think this is evidenced a little bit as well in the price of gold over the past like 15, 20 years. Like gold has performed quite well, but gold was very static through periods of high productivity increases. And while there are the gold bugs who maintain that gold had been money long term, and I think they were right, I think they're still right, that did not necessarily attract capital when other asset classes were performing so well, when the S&P was cooking, when tech stocks were cooking, right? Like a stable store of value was not an attractive place to put capital. And that's gold. Gold's got a 5,000 year history. It's got, it's recognized as the base of the global monetary system prior to the US dollar. It's still, being purchased by reserve banks globally, right? And so for gold not to be able to necessarily attract those capital flows, and there's maybe other reasons why that might be, but, talks to the difficulty of building a project from the ground up with the ability to perfectly match inflation or perfectly protect purchasing power over time. Now, dollars, as I said, are volatile too. Dollars are volatile to the downside. Actually, I'd love to hear what you guys think about that thought experiment too, as well. Maybe extrapolate on it a bit further. Maybe tell me if you think I'm wrong. But I think that's a really interesting way of thinking about why Bitcoin should not have been designed as an inflation hedge, and why number go up was such a powerful kind of story and key part of Bitcoin's narrative. And actually, just to finish on that point too, all of that narrative, all of those capital flows, all of that attention that Bitcoin garnered through its incredible rise was what allows Bitcoin now to be a challenger monetary system, right? If it had not gained so much attention, mindshare, liquidity, it could not be a challenger monetary system. And so I think the point here is that volatility is Bitcoin's lifeblood. Volatility gave Bitcoin its story. It attracted the masses. It built its mindshare. It built its brand and its reputation. Bitcoin is built on volatility. This is what has allowed Bitcoin to become a challenger monetary system. And if it was stable, I think it would have failed very quickly to attract any capital or attention whatsoever. Now, as I said, we know that dollars as well are volatile, right? Like this idea that dollars are super stable and you can buy the same thing today and tomorrow is not true. And we see that in inflation. But I think there's a really interesting kind of forward-looking tech point here as well, is that when people think about stability and think about dollar stability, they think about going to the shops or the supermarket or buying things online. And they think about the fact that the bag that they want to buy was $100 last week, and it'll be $100 in 6 months for the same bag, right? Or maybe it'll go on sale. And actually, that's probably a good point. That's when we start to see the volatility. Now, a lot of this is probably down to analog pricing, right? And the fact that for many years, for the history of well, maybe not the history. For a long time, it's been much easier to price things in dollars in a stable way because price could not be displayed dynamically. But we're starting to see the emergence of markets, like digital markets, that enable you to price things that show supply and demand, manipulating markets. And the example I would point to for this is Uber, right? Uber has demand-based pricing. When you're trying to order an Uber in the city at 5 o'clock on a Friday arvo, you're probably going to pay more than you will at 12 p.m. on a Tuesday. This demand-based pricing, this market, shows that the value, the demand of the goods and services changes what they're worth in fiat terms. The point that I'm trying to illustrate here is that this kind of marketplace already exists in digital forms. And I don't think there's any reason why we couldn't continue to build marketplaces that supported Bitcoin's volatility in the short term, that could show dynamic pricing in sats and allow people to participate with Bitcoin rather than fiat, because this already happens. And that's kind of another interesting little thought experiment to think about what it could be like if we forecast ahead dynamic marketplaces built on Bitcoin. Cool. All right. Now, The next point, I think, which is a really important one to consider, is that volatility decreases as adoption grows. So we've had such a volatile history with Bitcoin. Bitcoin's story is built around volatility, and Bitcoin will continue to be volatile because it's the most liquid market in the world. It's honest, it's not suppressed, it's not supported, it can't be bailed out. It has to reflect the value of this asset in the market at any given time. And it's traded across hundreds, if not more, exchanges, centralized exchanges and decentralized exchanges. It's now traded across ETFs, institutions, custodians, brokers. It's traded in more places than anything else. It's the most liquid market in the world. So the volatility is honest. It's not suppressed. And this means that this makes it such an interesting part of Bitcoin, right? It makes it a truer market than some of the other markets that you might look at and say, oh, they're more stable, where in fact they're just more suppressed or more manipulated. Now, volatility decreases as adoption grows. So let's take a look at this Fidelity report. And this is a little bit older. I think this might have been 23 or 24. Some of these charts are a bit older. But what we can see very clearly is that as Bitcoin matures, volatility is on the downtrend. And we're watching Bitcoin monetize in real time, right? And that was always going to be an incredibly volatile process and will continue to be a very volatile process. Here, we're only looking at $1 trillion market cap on this chart. And so we have, progressed even now up to 2 trillion. And so as the market cap of Bitcoin grows, as it gets more liquid, the incoming capital, or the fleeing capital, right? It's both in and out, as a proportion of the entire market cap decreases, right? As the market cap gets bigger, individual buys and sells have less of an impact. Volatility decreases over time. Does that make sense? I hope so. Let me walk through that again, or provide an example. At a $2 trillion market cap, a $100 million buy is going to move the market a lot less than it would have at a $500 million market cap, right? At a $500 million market cap, Bitcoin probably could not have absorbed a $100 million buy order. And to the inverse, a $100 million sell order would have crippled Bitcoin. But in a $2 trillion asset, maybe that's more. My numbers are wrong there. 100 million is still huge, but you get my illustration, right? As a proportion of the total market cap and the available liquidity, the impact of that buy is much smaller. So as Bitcoin's volatility decreases, does that mean that it gets better as money? Well, maybe, but also volatility is not, I think, what is super important here. What is important is that Bitcoin continues to protect purchasing power over time and grow purchasing power over time to such a significant level that it continues to maintain its narrative, to attract more capital, to build itself as a challenger monetary system, to attract more liquidity. For Bitcoin's short term, that is what is far more critical than stability, because in doing so, in leveraging its volatility to attract capital, it creates more stability. And you can arrive at an eventual hypothetical endpoint where you begin using where Bitcoin has moved from the store of value, where it's volatile to the upside, to a medium of exchange where its volatility has been muted enough for it to be used to buy goods and services in something like a dynamic marketplace, or even just sold for dollars at the point of sale in real time, like most of the crypto card solutions that we see, to eventually a unit of account. And a unit of account is the end point at which Bitcoin is no longer volatile, because things are measured in Bitcoin, right? And that is the status that the dollar has right now, and that perceived volatility is zero, right? The stable purchasing power of the dollar is zero. Now, I did spend the first part of this video illustrating why the dollar is not stable, while the dollar is volatile to the downside. But if we extrapolate that hypothetical scenario where Bitcoin becomes the unit of account, it's still very likely that things will be getting cheaper in Bitcoin, and Bitcoin will still be volatile to the upside in real terms, in purchasing power terms, even if it's a unit of account by which we can measure other goods and services. A fascinating way of thinking about that too, which I think is kind of a key way to imagine that endpoint at Bitcoin as a unit of account, is that at that point, potentially, we only have 21 million Bitcoin, or at very least, the issuance rate of Bitcoin is very well understood. It's very well known. We know how much Bitcoin is going to be in circulation at any given time. And for me, that makes it such a better unit of account once we have a level of adoption which supports that. Let's use centimeters as a parallel analogy. When you want to measure a length, a distance, right, you need to have a measuring stick that doesn't change. And when you want to measure things over time, you need the ruler to have 100 centimeters today and 100 centimeters tomorrow. You can't have the absolute length of a ruler changing, or everything that you measure will be fraught with danger. And, the desk that you're building that you start today and finish tomorrow, if your ruler is changing size, is going to be a pretty jangly desk. Now, the monetary supply, the M2 money supply, which I should have pulled up, we know has expanded an incredible amount over time. And not only that, expands at a uneven rate, right? Like, we can't even see how many dollars are currently in the system. And not only that, we don't know when they're going to enter. We don't know whether we're going to go into a quantitative easing cycle, a quantitative tightening cycle. We don't know whether we're going to have huge interest rate hikes, dollars drained out of the system, or whether we're going to go into another COVID period like this one here. We have an enormous amount of money printed and flood into the system. So that is, to me, like, to bring it back to the analogy, like, that is the ruler where you don't know what it's going to be tomorrow. And then we use all these other metrics like inflation or like trueflation to try and measure that change over time. But with a scarce and an absolutely scarce asset like Bitcoin, when you use it as a unit of account, and it doesn't change over time, or the issuance schedule is guaranteed over time, it's far easier to understand how the value of things is changing when your ruler stays the same, right? When there's only 21 million Bitcoin, the price of a banana over time is going to be much easier to track once we reach that unit of account stage, when volatility is sufficiently muted by inflows, by capital inflows, and we start to move from medium of exchange to unit of account. Now, that's a long way off for the minute. Bitcoin is store of value. It does that very well. And I expect that this will probably be the focus of Bitcoin as a monetary technology, because, as we know, volatility attracts attention, attracts capital, mutes volatility over time, and move us towards medium of exchange and unit of account. Without volatility, Bitcoin could not have ever hoped to challenge the entrenched monetary systems. I hope that was helpful, Binanceans. I hope I didn't go too far down the rabbit hole there. Please let me know your thoughts and feedback. And I look forward to sharing more with you on future episodes. I'm hoping we'll get one more show in before the end of the year and try and do a bit of a 2025 wrap. But if not, have a fantastic holiday period. I'll see you next week, guys. Bye. Please note that this discussion includes insights from non-affiliated third parties and key opinion leaders. Binance provides this platform for informational and educational purposes only and is not responsible for any content or insights provided. This information should not be considered as financial, tax, or investment advice from Binance. DYOR, Binanceans.